Hello traders, Gary Wagner here. It is 12:14 in Honolulu and 6:14 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 22nd day of July, 2022, and this is the daily report for gold and silver, our weekend review. For the first time since August of last year, gold prices actually broke below 1,700, trading to a low yesterday of $1,678 and recovering well above 1,700. Today we saw follow-through buying with gold moving higher by about $12, and the most active August contract is currently fixed at $1,725.30. Fortunately, we have had an order in the market since July 14th to buy gold at 1681 or better. That was filled yesterday. We had an initial stop about $14 below that price point, but we have moved our stop up twice since we put the trade on yesterday. On today's show, we will talk about yesterday's trade, why we put our price order where we did, why we've raised our stops where they are, but most importantly, our current exit strategy for next week. We have absolutely been aided by recent dollar weakness. Over the last couple of days, it has helped us substantially. The dollar gave up 0.35% today and is currently fixed at 106.435. Lastly, I wish I could say that silver joined gold in its upward ascent in pricing. That did not occur. And in fact, we saw a strong sell-off in silver, losing 1.22% or 23 cents, with the September contract currently fixed at $18.49. This first chart is a weekly bar chart of the continuous contract of gold futures. We are using this chart to look at various points in time in which the price point of $1,678 has resulted in either a point of resistance or a level of support. The first area that I draw your attention to occurs at the end of this screen on the left-hand side, and at this point, we saw $1,678 actually act roughly as resistance, and that was up until May 2020, when we had a long period of time, approximately 2 months, in which we had numerous weeks trading just below 1678, but recovering above that on every occasion. That is labeled as A. The second occurrence happened in March of 2021, and we saw two instances in which gold traded to a low just below 1678, and on both bars, it recovered well above that. And then, of course, there is the flash crash that occurred August 9th of 2021, when market forces took gold on a $100 ride in terms of the trading range. We actually saw the price of gold decline by $60 in a matter of minutes, which leads us to yesterday's instance, mark D, in which we once again hit this price point and, in fact, bounced back above that. Historically speaking, on each occasion that we have seen gold drop to or just below 1678, we have seen a fairly strong recovery, but nonetheless, to me, it was a very logical place to look for potential support. Which brings us to the most important topic that we will cover today, and that is our stop as well as our exit strategy. Currently, we have moved our stop on a couple of occasions. Our current stop is at 1705. When we look at today's high that came in gold, which was $1,738, we would like to exit this trade anywhere between the high of today, 1738, up to around $1,752. The reason I'm picking 1750 to 52 is these series of tops on our daily bar chart. The fact of the matter is, on Wednesday, the Federal Reserve will conclude the FOMC meeting. They'll announce a rate hike of either 75 basis points or 100 basis points. And regardless of what they announce, I expect that we could easily see wild price gyrations, a knee-jerk reaction with volatile price swings, which means that I would be most happy to pull profits prior to the conclusion of next week's FOMC meeting. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.